the radical. Fundamental principles of freedom, rational self-interest, and individual rights. This is the Yaron Brook Show.
All right, everybody, welcome. Welcome to Yaron Brook Show on this Father's Day, Sunday. Hope everybody's having a great weekend and a great Father's Day. So, the SEC won't let me be. Oh, okay. That's not good. You don't want to get on the wrong side of the SEC, although if you're Elon Musk, you might be able to get away with it, but the rest of us would suffer horribly. All right, let's see. David Sloan is trying to get a job at the Ayn Rand Institute. I'm not the guy to talk to. Talk to the people at the Ayn Rand Institute. Apply for a job there. Talk to the CEO. I don't do hiring. I don't do any of that. Best friend Hank, cool. Thank you. $50 right off the bat. Get us started. That is amazing. Will Neuralink be discussed? It seems like a scheme. I doubt it's a scheme. I don't think it's a scheme. I know people who know more about it, who seem excited by it. No, I don't think it's a scheme. I don't think it's as big of a deal as some people are presenting it. But there's no reason to believe that it's a scam. That it's a scam. Jonathan, Hadza, thanks for the question. Jonathan, thanks for this support. I mean, almost every show, or every show. Thumbs up to Jonathan Honing. All right, insider trading. We're going to talk about insider trading. We're going to talk about Elon Musk. I mean, Elon Musk's tweet don't exactly qualify as insider trading. He was accused more of fraud rather than insider trading. But it's all under the SEC. It's all under that wonderful agency called the SEC. So that regulates markets, it regulates investors, that regulates market participants, regulates companies and the trading that goes on with their stock. So we're going to talk a little bit about what Elon Musk got in trouble for. What the latest is with it. There was a story in the Wall Street Journal at the beginning of June about updating us kind of on letters exchanged between the SEC and Tesla that I think are quite revealing of the SEC, but also of Elon Musk and Tesla, and of in the end, well, I mean, you'll see. So we'll talk a little bit about that. Then we'll talk about broadly about insider trading. We might talk a little bit of some of the famous cases. Maybe talk about Martha Stewart, Martha Stewart's famous case about insider trading case, and we'll see. We'll see. Of course, happy to take your questions. Any questions you have on insider trading, on trading more broadly, on SEC, on regulations of financial markets. All of that is legit, so feel free to ask questions. Of course, $20 super chat questions get priority. We've already got best friend Hank is already put us way ahead of normal, 4 minutes into a show. So thanks for that. But I encourage others to jump in, particularly with questions. It's great to have back and forth and participation. So let's talk about Elon Musk. I mean, obviously, probably the most talked about entrepreneur in the world today, probably most visible and the most cited one, the founder of PayPal, but more recently, of course, of Tesla and the Boring Company, and Tesla also does, of course, solar panels, and a number of other companies and innovations that Elon Musk is responsible for. He's certainly a pretty amazing entrepreneur, a pretty amazing businessman. It's true that both SpaceX and Tesla receive a lot of money. Wow, Todd. Yeah, Todd has just given Alejandrina the night off by taking us to $400 right off the bat. Very cool. Thank you. Thanks a lot, Todd. Really appreciate that. That's terrific. Obviously, Elon Musk, an amazing entrepreneur, has done phenomenally, is both managed to create wealth, but also managed to, figure out how to leverage, let's call it, government programs to the benefit of his companies, to the benefit of his dreams, to the benefit of his ambitions, and ultimately to the benefit of his wealth. So, most of his wealth is from Tesla, and that is definitely not a company that could have achieved the kind of financial success it has so far without significant money coming in from taxpayers through all kinds of emission credits and things like that, primarily in California, but also at the federal level. But Elon Musk is also just a pretty amazing ideas guy. He's a pretty amazing operator. He's a pretty amazing entrepreneur. And he's got a certain attitude that I have to say I like, a certain arrogance, a certain perspective of a doer rather than a taker, a perspective of I don't really give a damn and get out of my way and let me do, let me produce, let me create above and beyond anything else. So a certain attitude towards the bureaucrats, towards the regulators. I love the fact that he refused to shut down his plant in California during the lockdowns in California, and just he has this capacity and ability to stand up to business, to regulators, to politicians, and at the same time, unfortunately, he's quite flawed because he is a real believer in a mixed economy. So I don't want to come across as here just a cheerleader. Definitely mixed character, but certainly a lot of positives involved. Anyway, Elon Musk got in trouble in 2018 when on the 7th of August in 2018, he tweeted, and all of his troubles have been on Twitter. He tweeted, "I'm considering taking Tesla private at $420. Funding secured." Now, why did this get Elon Musk into trouble? What is about this tweet would trigger an SEC investigation? Now, first, immediately upon the tweet, the stock price of Tesla went up significantly. I think it went up over 10%. And that triggered, like, whenever stock price out of the blue goes up a lot, that triggers an SEC investigation. The SEC identified the source of kind of the driving it up, Elon Musk's tweet. Now, if that had been the end of it, if Elon had tweeted this and then ultimately Tesla had gone private at $420 a share, I doubt that the SEC could have done anything about it. Elon was announcing to the world his intention. The intention was a real intention. It was true. It panned out. And he did it on a public forum without benefiting some at the expense of others. The SEC, as we'll talk about, is very concerned about some people benefiting from information, from knowledge, from ability over others. Equality is the primary virtue, according to the SEC. So everybody needs to be treated the same. You have to have the same information, the same ability, the same access to information. How you're supposed to trade if everybody's the same? If everybody's the same, everybody comes to the same conclusions. Nobody ever trades. Nobody ever trades. Ryan is back funding my balcony show, right? And nothing happened over the weekend to renovations. So hoping we can get back to renovations tomorrow. We'll see if hopefully all the contractors will show up. We've got a really, really intense 3 days of trying to get a big chunk of the renovations done so that we can start doing other stuff. There's a whole chain of events. And mainly the big deal of the chain of events is our stuff is arriving here in from California, and the place has to be ready to receive it. And for that to happen, our contractors have to go all out for the next 3 days. And I haven't seen that happen yet in Puerto Rico among contractors. So we'll see. We'll see if we're able to pull it off. Anyway, so the SEC is upset about this tweet because it changed prices. But you could argue it went out in a public information. They could say some people were benefited. The people who follow Elon Musk benefited versus people who didn't. But that's probably not an argument that would stand up in court. If you announce this information in the newspaper, only some people subscribe to the newspaper. If you send out a press release, only some people get the press release. Whatever you do, not everybody's going to get it at exactly the same time. The problem with the tweet is that Tesla did not go private, did not get bought out. And indeed, since the tweet says, I'm considering taking Tesla private at 420, funding secured, it turned out the funding wasn't actually secured. So the SEC sued Elon Musk for fraud, that he provided false information, the funding wasn't secured, and therefore that he was guilty of misleading investors. Now, this is a stretch, in my view, for a number of reasons, right? Notice Elon is not saying, I'm taking Tesla private at 420. He's saying, I'm considering taking Tesla private at 420. Funding secured. Now, funding secured sounds pretty committed, but he's only considering taking Tesla. And yet the SEC went after him, all guns blazing, because he was trying to supposedly manipulate the stock by providing false information because the funding wasn't there. They landed up fighting it out, and they came to a consent decree. And the consent decree was that Tesla would have to pay, Elon Musk would have to pay the SEC $20 million. What does the SEC do with all that money? Goes to Treasury. Adds up to your tax money. It gets to pay $20 million to the SEC. Elon Musk had to resign as chairman of the board of Tesla. And according to the consent, all relevant tweets that Elon Musk was going to publish in the future had to be reviewed by counsel, by Tesla counsel, had to be reviewed by lawyers before he could tweet them. Now notice here that, I talked about this the other day, that Elon Musk, in his capacity as speaking for Tesla, has no free speech rights. He can't say what he wants. He can't say what he wants to whomever he wants. Now, he can't say falsehoods under any doctrine because falsehoods are fraud. That's why he was sued for fraud. But it goes beyond that. There's certain things he cannot say, and according to this consent decree, he cannot say certain things unless the lawyers review them in advance. First Amendment, according to the Supreme Court of the United States, this has not been overturned by any conservative Supreme Court or any other Supreme Court. Businesses, commercial interests, do not have First Amendment protection. Commercial speech is not protected, which is a travesty. Anyway, Elon was supposed to allow Twitter to review all his tweets relevant to the business. I saw an interview with Elon Musk just after he had signed. First, he refused this deal, and then I think a week later he accepted the deal. I think his lawyers told him he better not go to court. Things could get a lot worse for him in court, so he accepted the deal in the end. Anyway, a few weeks after this deal, Elon Musk is being interviewed. And in the interview, the interviewer asks him, so is Tesla reviewing your tweets? And he goes, no. Do you intend to submit any of your tweets for Tesla lawyers to review? And Elon Musk says, no. He just flat out publicly is saying, I'm not paying any attention to what the SEC requires. Anyway, it turns out the SEC has been monitoring, has been following this. And it has now accused Elon Musk twice of violating the rules of his consent decree, and has actually applied for a court to try to go after him. It seems like the court basically said, you guys settle this. This doesn't seem that bad. You guys settle it. So there's been an exchange of letters between the SEC and Tesla, which I thought was quite revealing. This is from a Wall Street Journal article, I think dated June 1. So the first tweet that the SEC got upset about, notice the pettiness. And, this is the kind of fraud they're going after. I mean, they couldn't catch Bernie Madoff, who stole $52 billion from shareholders. They're fraudsters all the time, right? In financial markets, unfortunately. The SEC is too busy monitoring Elon Musk's tweets to catch any real criminals. See, here's what really pissed him off. On July 29th, 2019, Musk tweeted, "Spooling up production line rapidly, hoping to manufacture 1,000 solar roofs a week by end of this year." The SEC goes, whoa! You're required to vet any public message like that about the company with Tesla lawyers. You're giving production numbers and sales or delivery numbers. Those are part of your consent decree. You're supposed to have Tesla lawyers review this before you go public. This is what they're worried about, right? So they wrote to the Tesla and to Elon Musk saying, you guys are in violation, you're going to get in trouble. I love Tesla just basically not really caring. So Tesla goes back and says, oh no, and Musk did not submit the tweet for review, and that a committee of the board determined that it didn't require authorization because it was wholly aspirational. It wasn't predictive. It wasn't telling people what was actually going to happen. This was aspirational. He was aspiring to 1,000 solar roofs per week by the end of the year. SEC was not happy with that, right? Less than a year later, on May 1st, 2020, Elon Musk tweeted, "Tesla's stock price is too high in my opinion." Stock price, of course, the next day went down. This prompted a letter from the SEC. Wait a minute, guys. You're supposed to review that tweet. Tesla wrote back and said, I mean, this is a tweet that affects the stock price. This is definitely a kind of tweet that the board needs to review. This is definitely the kind of tweet that, we need supervision. Shareholders got hurt because the stock price went down. Tesla comes back to the SEC and says, no, we didn't review the tweet, and we don't think we should review the tweet. The tweet constitutes personal opinion and does not require authorization. I mean, basically, everything Musk tweets is a personal opinion. I mean, he is the CEO of Tesla. So how do you differentiate between a personal opinion about Tesla and an official statement from Tesla if the CEO is tweeting? I mean, they're basically just tweaking the SEC. So the SEC seeks records. Tesla says, records about the background for this tweet. Tesla says, we have no records. There just aren't any records. So the SEC writes, In the face of Mr. Musk's repeated refusals to submit his covered written communications on Twitter to Tesla for pre-approval, we are very concerned by Tesla's repeated determinations that there have been no policy violations because of purported carve-outs. Right. So Tesla's counsel, outside counsel, replies, right, that share prices for Tesla were not covered under the agreement. And he says regulators are trying to harass Tesla and silence Mr. Musk with investigations that overlap endlessly. He writes, the serial nature of these investigations leaves us gravely concerned that the SEC is targeting Mr. Musk for an improper purpose. In other words, we're standing up to you. We're not going to fold. We're not going to give in. We're going to fight you. Good for Tesla. Good for Elon Musk. Hi. Now, it seems like these back and forth of letters have so far gone nowhere. The SEC has not filed anything, has not gone to court. But know what the SEC is doing. This is the way it spends its time. It monitors Twitter for Musk quotes. Go catch the bad guys. You know, the only reason for an agency like the SEC to exist, I don't think SEC should exist, but if it was, is to catch criminals, to catch fraudsters. And again, they are fraudsters, and they always will be. But the pathetic nature of this kind of harassment and going after people like this is just, pathetic. But it comes from a certain view, a view that is captured by insider trading. So we're going to talk a little bit about insider trading laws, why we have insider trading laws, what the basis for insider trading laws, the philosophical foundation for insider trading laws, kind of the origins, at least in American law. Robert asked if I drink coffee. Yeah, of course I drink coffee. Quite a bit of coffee. I love coffee. I don't know why you're asking. Do I look tired? Do I need a cup of coffee? Probably. But it's too late. Too late for coffee. I won't sleep if I drink coffee now. So we're going to talk about insider trading laws. Before we do that, I want to remind everybody to like the show before you leave. We've got about 37 likes, 111 watching. So likes should be significantly higher. Don't forget, if you don't subscribe to the show, please subscribe. We're over 26,000. Cool. We're over 26,000. We're heading towards 100,000. That's the goal. And hopefully you can help us get to the 100,000 by subscribing to the show. Press the bell button, and you'll be notified when I go public. So what did we do? We did like. Don't forget to like the show before you leave. Now's a good opportunity because I'm reminding you. So just like the show if you like it. Don't forget to subscribe to the show. It's really great. I don't drink Monster energy drinks. No, too much sugar, too much. I don't need it. I don't need energy. I've got the energy. It's right here. It's coffee. 3 cups of coffee, morning and early afternoon. Last cup of coffee maybe at 2:00. 3 cups of coffee. I caffeinate myself up during there and not there. Jacob says he's here from the Vosh debate. Excellent. Thanks for joining us, Jacob. I hope you subscribed, and it's good to see you here. The Federal Reserve has more subscribers than you. The Federal Reserve has more money than me. The Federal Reserve has more people than I do. The Federal Reserve has more marketing staff than I do. The Federal Reserve has thousands of times more economists than I have. The Federal Reserve is just massive. All you get is me Christian and Angela, and Alejandrina. That's about it. That's about it. We can't compete with the Federal Reserve. I wish I could. The world would change. It would be a different world. Yes, don't forget to support the show. If you like the show, if you get value from the show, only if you get value from the show, please support the show by value for value, a trade, right? We're all traders, hopefully. This is not wage slavery. It's not a wage. This is a pure trade. I'm kidding about the wage slavery. I'm opposed to the whole term. You know that. So you can trade with me. $2 a month is great. $2,000 a month is great. We have everything in between those ranges from $2 to $2,000. So please join the group of people, about 600 people who support this show. You can do so on YaronBrookShow.com/support. You can do it on Patreon. You can do it on Subscribestar. You can do it on Locals. And, it would be fantastic if one day we had 10,000 people supporting the show financially. Again, that would put us directly on the path towards changing the world. Yuan's clip, Own Your Mind, is my favorite. I don't know that clip. I don't know what the clip is. But is that the name of the clip? I'll have to look it up. I don't even know that clip. All right. Insider trading. Insider trading sounds like I love listening to you while I practice music. Thank you for streaming. Thank you, Zachary. Really appreciate that. While you practice music, how do you do both those things at the same time? Like, doesn't practicing music require all of your attention? I know I don't, but doesn't practicing music require all of your attention? That's interesting that you can pull that off. Good for you. So insider trading is really, it sounds like it's a law, regulation, controls over the abilities of insiders to trade. But that's not what insider trading means. And if you are a trader, this is important because it's important you know what insider trading is so you don't get into trouble. Insider trading basically means that you cannot trade on, let's call it, ill-gotten information that is not public. So if you know it's not public and you trade on it, that is illegal. That is true for insiders, people in the company who obviously have significant information about the company that's not public, and therefore they have to be very, very careful when they trade. And I'll tell you how that is dealt with so that they don't get in trouble with inside information. But it is true of anybody who attains information that is not public, that they know is not public. If they trade, they can be sued and they can go to jail for trading on inside information. Now, insiders, corporate insiders, therefore, are restricted in when they trade. So one of the things that happens is, in order to prevent the appearance of insider trading for insiders, what happens is there are only certain days of the month, certain periods in which they can buy and sell. Those periods are always separated from any corporate announcements. So they're not before any corporate announcement. So it can't be perceived as if they knew what the announcement was going to be, therefore they traded. So the amount of bureaucracy and effort that goes into making sure that there is no appearance of insider trading by insiders is unbelievable. But then if you're not an insider, you have to be very careful. I'll give you the story of Martha Stewart. You know Martha Stewart from MarthaStewart.com, probably, Martha Stewart Everything. I guess she's still, Martha Stewart's still big. She suddenly was big, massive, huge. In the 1990s, she was everywhere. She was on TV. She had her own TV show. She had her own brand. She really was everywhere. I think she's made a comeback, but in the 1990s, Martha Stewart was everywhere. Very wealthy, incredibly successful, an amazing entrepreneur, Anyway, in 2001, Martha Stewart sold all her shares in a biotech company, I Am Clone. 2 days later, I Am Clone fell 16% after it was publicly announced that the FDA had not approved I Am Clone's primary pharmaceutical product, doesn't matter what its name is. By selling her shares so close to the announcement, right? So close to the announcement, it immediately triggered an SEC investigation. What was going on here? She avoided, by doing so, a $45,673 loss. Really insignificant given her net worth. I think she was a billionaire at the time. It turns out that, and importantly, it turns out that the CEO of the company had also, not him, just him, his entire family, had all been selling stock, $5 million worth of stock, in the days leading up to the FDA announcement. So he knew the FDA was not going to approve the drug. He already had, quote, the inside information. He had been selling stock, and so had Martha Stewart 2 days before. Now, it turns out that he was clearly in violation of the law, right? He knew inside information. He traded on that information in order to prevent himself from losing money. It's unbelievably stupid of him, because this is like a straightforward application of insider trading laws. Everybody knows this. The SEC was bound to catch it. It's a classic case. It's not sophisticated. He didn't even try to hide it. He just did it. Got arrested, spent time in jail. But the case of Martha Stewart is a little bit more complicated, because Martha Stewart did not know that the FDA had indeed not approved the drug. So why was Martha Stewart, who went to jail, by the way, she spent 5 months in jail and had to pay a fine, 5 times the money she saved or something like that. What was the case? Well, the case was based on the fact that her broker told her that the CEO was selling his stock, and that the broker recommended that she sell. He didn't tell her why the CEO was selling his stock. Maybe he didn't even know. He just told her that the CEO was selling the stock. Now, yes, that's not publicly available information. But it's bizarre. Martha Stewart did not have any fiduciary responsibility to the company. She was not an officer of the company. I mean, you could argue the broker had a fiduciary duty to the company because he was the company's broker or had a relationship with the broker, and he was revealing private information. You could argue that the broker broke his fiduciary responsibility to the CEO by letting somebody else know what he was doing. But what did Martha Stewart do? She got some information from the broker about somebody selling stock, and she sold. And yet the government viewed that as insider trading. Best friend Hank wants to cancel me. Why are you canceling me? What did I do? What did I do? I missed the thread where I did something deserving of a canceling. Now, the problem for Martha Stewart was, in the end, not just that she had traded on non-public information. but that she lied about it. She told investigators originally that she had a stop loss, that it was an automatic trade, which is not true. She clearly sold because the broker told her to sell based on the fact that the CEO was selling his stock. In the end, if I remember right, I didn't get this in the news stories, but in the end, I think what the government really got her on was an obstruction of justice. They got her online. But they went after her for the insider trading. Now, why is insider trading, why do they take insider trading so seriously? Remember, she went to jail for this. Why is insider trading such a sin that at least two hedge funds have now been destroyed? Cohen's hedge fund and another hedge fund run by a guy with a very long Indian name that I cannot pronounce. Their hedge funds have been destroyed because of being sued for insider trading. People spend a lot of time in jail for insider trading. Why is insider trading viewed so badly? And indeed, there's a massive debate within the field of finance about whether insider trading is good or bad. Because why shouldn't insiders benefit from insider knowledge? I mean, it's so absurd today. Let's say you work for a company. I don't know. Let's say you make software, and you just signed a big deal, and you're a publicly traded company, and you just signed a big deal with another publicly traded company, a big one, and you think them using your software is going to benefit them, so you go and you buy their stock. That's insider trading. Unless the entire world knows that you have sold the stock to this company, it's insider trading. You traded on information that only you had. And you could go to jail for that. You can't trade in the stocks of your suppliers or your customers. Theoretically, you can't trade in the stock of your competitors. Let's say you know that you have a great product coming out. It's going to crush your competitors. It's an iPhone killer. And as a consequence, you short Apple. Insider trading. Other people didn't know that. It's insane. Why shouldn't you? You invest in a career, you gain knowledge, you gain skill, you gain information. Why wouldn't we consider inside information part of your compensation for taking the job? For having knowledge associated with the job. Now, the reason we're giving is a moral reason and a practical reason. The moral reason is it's just not fair. It's just not fair. What about all those other people who don't have your information? And that therefore, if you're buying, are selling to you, or if you're selling, are buying to you, it's not fair to them. They wouldn't buy or sell if they had your information. So it's not fair to them. But that's egalitarianism run amok. None of us has the same information. None of us have the same knowledge. Indeed, the whole basis for trading is the idea that we have different levels of information, knowledge, and evaluation and assessment. We disagree about the price. But let's say that I think that a stock is trading at 10, and I've got information that suggests it should be trading at 20. So I go into the market and bid 12 for it. The person who sells it to me at 12 has just made 20%. He's better off And I'm better off because I know it's going to go to 20. Let's say, so everybody wins. Yeah, he didn't win as much, but that's because he didn't have the information. That's reality. It's unfair. Information should be equal, like opportunity and outcomes. And it's stunning to me. It's stunning to me that nobody questions this. That egalitarianism, when it comes to the insider trading law, is just accepted across the board in our culture. Almost nobody questions it. Almost nobody challenges it. Right. If I think the stock is going to go down, I sell it. I sell it to somebody who buys it. Now here, they buy it, and it will go down. But they bought it based on their best assessment at a price that would have bought it anyway. Because I'm selling, I'm driving the price down, they're buying at a cheaper price than what they could have gotten it in the market otherwise. I'm saving them a little bit, you could argue. Nobody is actually worse off than they would have otherwise been. The point is not harm does to others. The point is not the harm. The point is the inequality. The point is the fact that we're not equal. Now that's the moral argument. What's the economic argument? The economic argument is, look, if insiders traded, then other participants in the market would be afraid that every time they traded, they were trading with somebody who had inside information. They would be fearful that they were being, in a sense, exploited by people with inside information. And therefore, they would be hesitant to trade. And therefore, people would trade less. There'd be less liquidity in the market. There'd be less participation in the market. The market would dry up. Now, I'd argue that if you're trading in the marketplace, particularly as an individual, thinking that you're not trading with better informed people, more knowledgeable people, you're delusional, because you are. You are already. So all insider trading laws do, is give people a false sense of confidence. But even if that's the case, even if markets dry up, or relatively speaking dry up, who's to say what the appropriate level of liquidity is? Who's to say what the appropriate amount of involvement of investors in the marketplace should be? What's optimal? Isn't it what the market determines under freedom? So, it might be the case that there'd be less trading. It might be the case that fewer people would be involved in the market. So what? And by the way, there's little proof that would actually happen. For example, Japan did not enforce insider trading laws until the 1990s. Certainly in the 70s and 80s, there was rampant insider trading in Japan. And yet, at the time, in the 1980s, Japanese stock market was the largest in the world. It had more trading than NYC. So at least the Japanese experience suggests that it's not true. In the 1920s, there was no insider trading laws in the United States. There was plenty of liquidity, plenty of trading going on. So it's not clear that the evidence is consistent with the idea, even if it seems reasonable to think that would be the case, that liquidity would dry up. But again, so what? And here's the solution, at least my solution, to dealing with whatever challenges. Oh, so here's another objection to insider trading. okay, so if insiders benefit on the way up from stock price movements, that's good, right? That's not harmful. So let's say I know there's something good is going to come out, I buy the stock, something good happens, I benefit, that's great. But imagine if a CEO shorts his own stock, buys put options. Put options are a way to benefit when the stock goes down. Now the CEO has an incentive to mismanage, to do harm, because he'll make money if he does harm. Now that, I think, is wrong. But that is wrong because it's harmful to shareholders. And therefore, I think shareholders should make sure that in their contracts of managers, they have a section that says, as part of your, part of your trading, you cannot short or buy put options on our company, on our industry, on whatever. You set the parameters. And every company could do it a little differently. And there'd be competitions, just like there's competition for wages and competition for benefits and competition for all kinds of other aspects of the business. There'll be competition around the kind of permissions allowed for trading. And it's very easy contractually, and shareholders, I think, would demand it, to ban board members and senior executives, maybe all employees in the company, from trading against the company. And he solved the problem through contract law. But I'd even say there is another solution that is even more interesting in my view. Imagine a world in which we have multiple stock exchanges. I mean, really multiple stock exchanges. Not like today where we have multiple stock exchanges, but are all made to be exactly the same through regulations. But imagine we had private, independent, unregulated, laissez-faire stock exchanges that competed with one another and that made money when you traded. Made money when companies listed and made monies off of your trading. So a certain something. Every time you trade, you paid a fee to the exchange for the trade. Imagine if that were happening. And imagine now that these stock exchanges now have an incentive to see a lot of trading going on. But they also have an incentive to get companies to list on the exchange. So they have to be both investor friendly and company friendly. And they have to find the right balance. And maybe different exchanges find different balances. So let's say one exchange says, we place no restrictions on insider trading at all. You can trade anything, anytime, anybody. And let's say another exchange says, no. We have very, very, very strict controls over insider trading. And let them compete. And if they compete, we would then see, from an economic perspective, what makes the most sense, what system makes the most sense. And it might be true that some companies, it is better, one regime is better, and for other companies, a different regime is better. Why do we assume that everything has to be the same? I mean, this is one of the many problems of regulations is the uniformity of them. When it's not clear that different companies should behave all the same. You could also think about accounting standards is the same way. We now have accounting standards. All companies have to file accounting based on the same FASB standards. Why don't we have competition of accounting standards? Why don't different firms file based on different accounting standards and let the market sort it out? Because we don't trust markets, and because we are egalitarians. We're driven by an egalitarian philosophy. And We're driven by an egalitarian philosophy that does not abide for people. Yeah, gap accounting. Why does everybody do gap accounting? We don't trust individuals. We don't trust individual companies. We don't trust exchanges. But we do trust individuals. We do trust individuals when they are motivated not by profit. We trust individuals when they're motivated by the public interest. We trust individuals when they're motivated by the common good. We trust individuals when they work for the government. We trust individuals at the SEC almost blindly. Luckily, the people working for Elon Musk don't exactly. We don't trust individuals who run companies. Why? What is it that makes individuals who run companies untrustworthy? It's that they're self-interested. It's that they're driven by profit motive. It's that they're not good altruists, not good sacrifices. But we trust the people at the Federal Reserve. We trust the people at the SEC. We trust the people in Congress sometimes because they're motivated by bigger things, by a higher cause. God. All right. So in a free market, some insider trading would be banned contractually. Other insider trading would be banned through exchanges, again, contractually. The government would have no business regulating trading unless fraud was committed. And what Elon Musk did was not fraud. I mean, shareholders might be angry with Elon Musk for disseminating kind of vague, non-objective information. The company might be upset at it. The board of directors might be upset at him. None of the SEC's business. None of the government's business. The government is there to protect our rights, not to get into our lives and dictate how we behave, what we do, how we live. But that's exactly what they've been doing. And let's be clear, insider trading laws are a lot new. This is not the Biden administration. This is not neo-Marxists. Everything bad is neo-Marxist these days. No, this goes back to 1934 securities legislation that established the SEC, 1934, and has been reinforced and grown and reestablished and recommitted to, and budget grown under every administration, including Republicans, all Republicans. So it would be nice to get rid of insider trading laws. Maybe one day, maybe one day. Let's see if there are any insider trading questions. What's your take on these? Well, no, that's a different story. I'll get to that. The Musk story is bittersweet. He was rallying people against short selling and hedge funds who could never hope to get away with it. He has. True. And you know, he's such a mixed character. He's such a mixed character. I mean, it's so bizarre and sad because he should be one of the good guys, and he's not exactly. Do any traders try to use proxies to do their insider trading, or is that too obvious? Yes. A number being arrested over time. I don't know. You provide insider trading to a friend. He does the trading. He gives you a kickback. I'm sure a lot of that happens, but people have gone to jail for that. People have been caught doing exactly that. So yes, there is the use of proxies for insider trading. Insider trading is a farce. Yes, all insiders have a better concept of business than theirs. That's naturally the case. Absolutely. Insider trading laws seem to have some parallel with the concept of antitrust, a concerted effort to make markets more inefficient. Yes, but it's all in the name of efficiency. It's a concerted effort to establish perfect competition, perfect information, complete equality, destroy success or make success difficult as possible. That's what's common. It's It's a distrust of the successful, a distrust of inequality in anything. That's what unites kind of insider trading with antitrust, and this idea that, you know, it's really, really, really hard to prove that you're innocent. Jason Fried from Basecamp said billionaires should just voluntarily pay all taxes so they pay their fair share and fight income inequality. Why do these people think their money is better off in the hands of government? They don't, but they feel guilty for making so much money. I mean, the fact is that they have bought into the altruism that is dominant in the culture. They're no different than everybody else in the culture, and they bought into the altruism, and they believe it's their moral responsibility, their moral duty to help others, to pay, to redistribute wealth. They've made a lot. Other people are not as, quote, lucky as they are. And it is their moral obligation to help others. And therefore, they should write the check. And government is running deficits. Government needs more money. Somebody has to pay for those deficits. Better them than the people who can't afford to. They can afford to, is what they say to themselves. But it's all a consequence of the guilt that altruism instills in them almost by default. It's a culture. It's everywhere. It's in their thinking. It's in their foundational emotional base. It's hard. It takes work to escape it. And very few people do. Very few people do. Even as objectivists. And we have the knowledge, and Iron Man's given us the tools. It still takes work, real work, to actually get rid of altruism and not let it affect different aspects of your life. Just as you're asked to prove a negative when you're asked prove that you're innocent. Yes, and this is why companies have these strict rules about when you can trade and when you're not, because that way you avoid, they minimize the possibility that you could even be perceived as being insider trading. Or, for example, a lot of CEOs have automatic trades, like Bill Gates had this for a while. I'm sure Jeff Bezos does this. Every quarter I sell 1,000 shares, every quarter. No information. You can't say I had information because I put this in years ago, and every quarter I sell the same amount. They never sell beyond that. It's so perverted and convoluted. Doesn't insider trading go on to the saying, privatizing the gains, socializing the losses? It seems like a moral hazard to me. Any good books on this? I don't know if there are any good books on insider trading. It's insider trading go to the saying, privatizing the gains, socializing the losses. No, because there's no, so I'm not trying to understand completely. There is a moral hazard in insider trading if you can bet against your firm. But that's what should be banned. But that should be banned by shareholders. It's not the government's business to do this. But the best writing on insider trading was by a guy named Mann, M-A-N-N. Let me just give you a citation. If you're interested in following up on insider trading, let's see. Henry Manne, Henry G. Manne, M-A-N-N-E. And he wrote a lot. He was the dean of the law school at George Mason University, actually the guy who founded, I think, the George Mason University. And he was excellent on insider trading law and why insider trading should be allowed on both the economics and the legal aspects of it. So if you're interested, if you just look up online, Henry G. Manne, Insider Trading, you'll get a bunch of his articles. They're easy, they're not hard to read. They're not very, legal speak or econ speak. So that is, I think, the best source. And then you can research beyond that. But I don't see who you're socializing the losses to. All gains should be private, and all losses should be private. And yes, you should avoid the moral hazard. You should avoid providing managers with the incentive to tank their stock. But that's relatively easy to do contractually. You don't need the government. Let's see. Okay, all the others are different. Oh, wait. Many corporations make large donations to art organizations such as orchestras and opera companies. Is that wrong in their sole proper goal in maximizing shareholder wealth? I think in a proper rational world, yes, that would be wrong. It's not their money. That money should be returned to shareholders, and shareholders can decide if they want to give the money to the orchestra or to the symphony. Now, a lot of corporations justify it as a form of marketing. And you can, I guess, maybe you could make the argument that it's marketing, that they choose those causes that are going to get their name out there, get their name on the baseball stadium, the symphony at the top of the banner or whatever, the sponsorship or whatever. So I guess to the extent that you could argue it's marketing, really is marketing, then it's fine. But to the extent that it's philanthropy should be done by shareholders. Shareholders have not given managers their money to give away. They've given managers their money to make more money. And then the shareholder can decide how they want that money. They want to consume it. They want to start a business with it. They want to give it to charity. They want to give it to their kids. It's up to them. What's your take on all these people saying BlackRock, pension funds, etc., shouldn't be allowed to buy residential houses? By what standards shouldn't they be allowed? Why shouldn't they be allowed? Because they're driving up prices? So nobody's allowed to drive up prices? Who gets to decide when their buying is driving up prices or driving down prices? When it's creating a market? Who gets to decide if people are benefiting or losing from it? These companies are buying up houses and then renting them. Maybe the renters are better off. Maybe the renters prefer to rent than to buy. Maybe BlackRock's doing them a favor. By what standard do you evaluate whether BlackRock or pension plans should not or should be allowed to buy homes? Now, I don't believe there should be such a thing as public pension plans. I think all public pension plans should be dissolved tomorrow. It should be illegal to have public pension plans because they're political. They're political animals. They should not be backed by shareholders. Give the money to the employees and let them invest it. Make it tax-free if you want. I don't care. But there should be no such thing as pension plans because they distort and pervert financial markets in significant ways. They don't act as wealth maximizers. They act as political animals. But if we start getting the government involved in this market is okay, that market's not, these people can buy here, these people can only sell there, you've lost all the benefits of finance. You've moved significantly further on the path towards fascism and away from freedom. So I think it's a ridiculous idea. You're on off topic, but why do interest rates make the stock market so volatile? All right, so what justifies a stock price? That is, how do you calculate what a stock price of a stock should be? Trying to think about how to do this simply without math. So, if you buy a stock, what are you buying? When you buy a stock, you're buying the company's future cash flows. You're buying all the assets, the money, the residual value, after the company pays all its expenses and debts. So let's say there's a company that expects to make $100 a year every year for the next 10 years. Well, and I own 100% of it. Let's say I own 50% of it, right? It's a publicly traded company. I own 50%. What should the value, how much am I willing to pay for that stock, for that 50%? How much am I willing to pay for that 50%? What's it worth to me? Well, it's $100. 50 of that is mine, so $50 times 10 years, $500. So it's worth $500 to me. No, not really. The $100 you get 10 years from now is not worth the same as the $100 you have today. There's some uncertainty about whether you'll get it. There's some inflation risk associated with it. And there's just the cost of money over time. So that's what an interest rate is. An interest rate is the cost of money over time. It's not the cost of money, it's the cost of money over time. And that's why interest rates vary over time. There's a 1-year interest rate, a 2-year interest rate, a 10-year interest rate, a 30-year interest rate. Some circumstances, there's even a 100-year interest rate. And then you use that interest rate to adjust the cash flows to what you're willing to pay for them today. It's called you discount them backwards based on the interest rate to today's dollars. And that's what you're willing to pay for the 50% of the company. It's a discounted value of future cash flows. A stock prices should reflect the discounted value of future cash flows. Now, why do people disagree on stock prices? Because we disagree about future cash flows and we disagree about the discount rate, the interest rate. Now, when the Fed changes interest rates, that has an impact on all interest rates, on the interest rates people use to discount cash flow backwards. So it has an impact on stock prices. The lower the interest rates, the higher the stock price. The higher all else held equal. The higher the interest rate, the lower the stock price. So prices and interest rates have inverse relationships. Because the higher the interest rate, the less money 10 years from now is worth to me today than under a low interest rate. So if I'm discounting back at 1%, I'm going to get a much higher number than if I discount back at 20%. That's why inflation matters to stock prices, because it impacts interest rates, which are used to discount future cash flows, which will then determine prices. Now, if I had a blackboard, all of that would have been easier, because I actually would have given you the equation, and you would have seen it. So the lower the interest rates, the higher the stock price should be. One of the reasons stock prices have gone up so much since 1982 is because interest rates have gone down from around 20% to basically zero. Just the decline of interest rates would justify massive increases in the stock market, many of the increases we've already seen, even putting aside all the progress, the growth we've made in terms of future cash flows. Inflation is just a factor that goes into determining interest rates. And if you look at interest rates today, then the market is not predicting inflation. Based on interest rates today, the market is actually predicting almost no inflation. Very, very low inflation. Now, you can disagree with the market. I'm just saying that's what the market is predicting based on the interest rates that are market determined. To the extent anything's market determined in a mixed economy that we live in. Are Arab countries socialist or mixed economies? They're neither, really. I mean, the mixed economies with a heavy slant towards statism, but they're not, for the most part, socialist. The government, depending on the country, the government don't own the means of production. Sometimes the military does. So in Egypt, you could argue through the military, but it's not done in the name of socialism. It's not oriented towards socialism. It's statism. It's just the state. It's just big government intervening, controlling, running things. And some of it is fascist, some of it is socialist, different elements of different things. One thing that they don't have is freedom. Now, at the level of the storekeeper, at the level of at the level of the marketplace, there might be some freedom. But anything more ambitious than that, starting a business, is completely controlled. Completely controlled. So it's a form of statism. Remember, not everything has to be socialism, fascism, mixed economy. There are other forms of statism that are harder to pin down. They don't have a clear-cut identifier. I mean, some of the Arab regimes were more socialist than others, but many of them were much more fascist than others. All right, a couple of $20 questions. Is there a moral argument for monarchy, historically, when the alternative was communism, as in Russia or arguably Spain? Interested in how this compares to conservatives now against progressives. Did the Russian monarchy kill more people than communism? No. Was there marginally more freedom under monarchy than there was under communism? Yes. But was monarchy something worth fighting for? No, because it restricted freedom so much. And in Spain, for example, do we know that the communists in Spain would have been worse than Franco? Do we know that the communists in Spain would have been authoritarian? Do we know if the communists in Spain would have survived as communists? Because no Western country voluntarily turned to communism. Something in Western culture resisted it. So we don't know what would have happened if the left had won in Spain. Would they have established communism, Soviet Union style? Or would they have established more socialist policies than existed before them? Would they have been, quote, democratic, or would they have been completely authoritarian and totalitarian like the Soviet Union? I don't know. I don't know enough about that conflict. But one of the points Ayn Rand made was when the fight was between the monarchs who had oppressed the people, who had been awful, who had been terrible, and the communists, well, the monarchs were going to lose. Because nobody was really that committed to their cause. And they weren't, what was the ideal they were fighting for? The only ideal they were fighting for is not being the other guy. People are not going to fight for not being the other guy. Unless they're fighting for a cause. This is, the Nazis rose to power fighting against the other guy because they were not the communists. But they could have never maintained that power and succeeded to the extent that they did in dominating Germany without a positive vision, which was Nazism. They needed that. They needed an integrating principle more than I'm against those guys. One of Freedom says Marie Le Pen is about to win in France. We'll see. I mean, rumors about Marie Le Pen's victories in France have been prevalent in the past as well. We will see if she actually wins. But it's going to be a very, very difficult time in Europe if she wins in France. It'll be very, very interesting to watch what happens. You recently mentioned the company behind Vanguard, Fidelity, and other institutions is misusing investors' money for bad political ends. Do you know of any major low-cost ETFs that aren't part of this problem? I don't. I mean, I'd have to do a little bit of research to answer your question. That is, what I would look for is ETFs that are not managed by BlackRock. BlackRock is like the monster in ETFs. But for example, ARK, which invests in tech, has ETFs. They're not part of the problem. Now, they're very aggressive in the investment in tech. They have huge weighting into Tesla. I wouldn't invest in them. But I think there are a lot of companies that have issued ETFs that you can do a little bit of research on them and find out, are they advocating for the stakeholder stuff? Are they voting consistently with the stakeholder stuff? And you can avoid those. So I think you can find that information pretty easily by just doing some research around ETFs. And ETFs is the best way to trade. But I would definitely stay out of BlackRock. BlackRock's not involved with Vanguard, but I did read that Vanguard has similar policies, which would be sad because Vanguard is a very innovative company. You might want to look at dimensional funds. They're not ETFs, they're mutual funds, but dimensional, I don't think does this kind of nonsense. And I'm sure there are other companies that don't do it, but BlackRock, which is the largest in the world, is committed to this. Committed to this. I read somewhere that saw Vanguard and Fidelity, but I don't have firsthand information about whether that's factual or not. BlackRock, I have firsthand information. It's easy to find. It's all over the web. You can read the CEO of BlackRock, what he says. Why did the Nazis have the best uniforms? Who says the Nazis had the best uniforms? I don't think they had the best uniforms. I don't even know what that means. What's best? What does any of that have to do with it? So, why do you so strongly prefer the communist AK-47 to capitalist AR-15? It's just because being in the field using both of them, the fact is that the AR-15 is super sensitive. You get a little bit of sand in an AR-15, it stops working. It's very fine-tuned. It's very sensitive to its environment. It's not a weapon you want to be in the mud and the rain or the desert sand with, because it'll jam on you. An AK-47, you can stuff it with mud. You can put sand in it, and it'll keep shooting. Keep shooting. If you look at Israeli special forces, at least in the day, today they have new weapons. They don't use AR-15s and they don't use AK-47s anymore. But in my day, in the late 70s, early 80s, Israeli special forces all used AK-47s, and because of their reliability, because their durability and reliability. The AR-15 was more lighter, easier to carry. You could jump in and out of a tank with it. You could run around with it much easier. AK-47 was bigger, heavier, more difficult. But when it came to shooting, and the same with the M16. M16, we called the AR-15, we called them a shortened M16. That was the name. The official name in the Israeli army for the AR-15 was a shortened M16. I don't know how much of these guns is determined by government regulation. Obviously, the government is the buyer, so I'm sure the Defense Department has a lot to say about how they're constructed and what they're made in. So I wouldn't be surprised if the reason was that. But then the Israelis made a gun called the Galil, which was a cross between the AR-15 and the AK-47. Durable, reliable, light. And that was a superior rifle to both. But today, when I look at soldiers in Israel, what they carry around, because they carry their arms, when they are walking around in the streets, it's a completely different looking rifle than anything I am familiar with, that I've ever shot. It looks kind of high tech. So I don't know what they use today. But basically, the AR-15 was too delicate, if you will, too sensitive. And I think that's bad specifications by the military in terms of, what they requested from the arms industry. I'm sure under capitalism, they'd get a better product. All right. Thank you. That was I didn't have to talk about money today because, you guys stepped up early on. So really appreciate it. And thanks for all the great support. Thanks for doing it early. I haven't counted, but it looks like we got probably to around $500. So that's terrific for a day without Alejandrina. So let me remind you before we leave here to like the show before you leave. We've got 120 people watching, 76 likes. There definitely should be over 100 likes to the show by now. Don't forget to share, particularly short videos are easy to share. That's the way we get the ideas out there. It's the way we get new subscribers. It's the way we get new people. If you're new to the show, please subscribe. If you haven't subscribed yet, I know about 30% of the people listening to the show at any given point in time are new to the show. I've never heard of new, relatively new, or are not subscribed. So please subscribe. Again, we're trying to get to 100,000 as quickly as possible. And of course, if you want to support the show on a monthly basis without being bugged on Super Chat, or if you're listening to this on a recording, I know there are a lot of you listening to this as a podcast, not live. A lot of you, many more people watch the YouTube show after, so non-live in the weeks to come, in the days and weeks to come. So you guys are not participating in the Super Chat. Well, the way you can support the show is, whether you're listening as a podcast or whether you're listening after the show, is through the monthly contribution on YaronBrookShow.com/support, on Patreon, on Subscribestar. It really, really does help to know that amount of money is coming in regularly. We've dramatically improved the studio here thanks to your support. We bought a nice, expensive, beautiful camera with a great lens. We've got these new lights that are really cool that I got, these LED lights. I can change the tone, the color, the brightness, everything, all from the computer. So they're Wi-Fi lights. I didn't even know that such a thing existed. And we're going to get bookshelves in the back just to give the studio a better sense. I think this is already a better look. I like the gray in the back, but it's not aesthetic, right? Nice to have something aesthetic there. Plus, the sound will be better once we get some sound-absorbing books in the background, and we'll do that over the next couple of weeks. We'll get some books back there. So that is the next step. Video quality is great. Now we need to get the audio quality up to the level of the video quality, and that's all thanks to you guys, those of you who support the show. So thank you for supporting the show. Thank you for making it possible. Not just to do the show, by the way. The support that you give the Yaron Brook Show allows me to do interviews. The Michael Shermer interview should be arriving any day now. So within the next 2-3 days, I think he's going to put it up on his channel. I encourage you to go watch that. So that interview, nobody paid me to do. You guys paid me to do that. So it allows me to do interviews. It allows me to do a lot of talks where I'm either paid a little bit or not paid at all. And I still do them because I know you guys have my back and you guys are supporting me. So if you don't financially support the show now, please do. Value for value. Trade. I think, given how much of this stuff I do, not just the show, but all the talking, the debates, all of that stuff, hopefully you get value out of that and you want to trade for that. All right, everybody. Next show will be Tuesday, Thursday, Saturday, Sunday. That's the schedule until I start traveling. And then who knows? We will figure it out as we go along once we get there. So thanks, everybody, for being with me tonight. I hope you enjoyed the show. I hope you value, I think, the somewhat education that you get here, which you don't get anywhere else. And I will see you all in